Hello, my name is Adrian Bermudez, um, and I think I have found the holy grail with Nasdaq trading. Right, I've been testing it for about 2 months. Um, I've been working out the kinks here and there, but I think I can give you guys a version of the holy grail and how great it is. So there's three things that I'd like to use when coming up to when building a strategy. You need to have a bias. You need to find SMTs that relate to that bias, and then you take projections, essentially standard deviations, right? So the way I form my bias is I look at midnight price, and I'm like, okay, if we're below midnight price, I'm bullish. If we're above midnight price, I'm bearish, right? I also look at this real-time trading hours gap, right? So essentially, it's a gap that's made from the close of market to the open of market. Half of the box fills about 50% of the time, or half the box fills up to 50% about 80% of the time. It'll fill 100% of this box about, I think it was like 70, 75%, right? So 80% to the midpoint, 70% to the top, right? So the way I see it is, if I'm below midnight and I'm below the box, right, I'm gonna be correct 70% of the time, 80% of the time. Then the last thing I use is this fixed range volume profile. I take it from 1800 over to 920, 925, and I find out what side we're on, right? So when you're on one side of the volume profile, you're going to want to tend to reach for the other side. And for me, that's what I'm looking for, right? So I'm below midnight, I'm below the volume profile, I'm below this box. That tells me I'm bullish, right? Since I'm bullish, I'm going to look for SMTs. SMTs are just a breaking correlation with another asset, which is, for me, it's NQ and ES, and those are the only one I use. The reason I only use NQ and ES is because they have like a brother sister type of relationship, and then YM, which you could also say is correlating asset, it has more of like a cousin relationship. They're not really that close. They're close, they're not that close. So when I'm looking for SMTs, and my bias is long, right? I want to go long. So I'm going to look at SMTs at the highs to try to find projections down to see where price can possibly reverse from. So let me get rid of this and clean this chart up a little bit. So today there was SMT up here, right? There was SMT before this down move. So what you can do is you can take your Fibonacci and then here's a Fibonacci, and you could just measure down, right? So I'll typically measure on the 5 minute and then I'll measure on the 15 if it doesn't align. And you'll see what I mean when I measure now. So I'm measuring here on the 5 minute, right? I only want the last up move, right? Well, it already got smashed through, right? We're coming into the market at around 9 o'clock, even 8:30. We already smashed into this, right? So if I'm coming to the market at 9:20, I can see that this standard deviation doesn't work, right? Because I want to see a reversal from the 2, and then I want to see a reversal from the 3.5 to 4 if it doesn't reverse at the 2. So right here, let me get rid of these boxes. So I know this standard deviation isn't correct because we already hit the 4. So what I'm going to do is I'm going to move up to the 15-minute time frame, and I'm going to take a projection of the 15-minute time frame. Right here, I took this projection, and you're wondering like, oh, why didn't you go all the way to the bottom? Well, because it has this wick here, right? And the way candles form, this is the last up move. If you go on the 5 minute, I can show you. These 3 down candles, I don't want to include that. I only want the up move with upward momentum. So here on the 15 minute, I take the last momentum and I mark out the 2.5, the 2 to 2.5, right? And then I mark out the 3.5 to 4.5. So let me just explain something real quick with this. When you're looking at these standard deviations, if you hit the 2 to 2.5 and you start reversing, like let's say we tapped into this and then we immediately jumped out over here, right? Green candle. and we immediately started going back up. You don't need SMT when you touch into a 2. You don't need SMT at the bottom to send you the opposite way. It's nice, it's great to have it, but you don't need it. Whenever you dump into the 3.5 to 4, this is the end of the move. So you're looking for an SMT to send you back in the opposite direction, right? I have the SMT marked. This one was kind of hard to find today because it's so far away. But there's an SMT with this low and this low. So there's SMT there, right? Now, after you have an SMT and you tapped into your 4, you just take a standard projection here. I go down and I try to find the cleanest breaker block, right? So for me, it would be this right here. I know there's a breaker in here just by the way the candle's formed. So you can take this to here. Now, what am I looking for? All I'm looking for once I get this projection, I'm looking for a break of structure up, or an engulfing candle up, or anything telling me we're going up, right? You can use IFEGs, you can use break of structure, you can use this, you can use that, doesn't matter. So what I tend to use is like, okay, we made a high here, change in state of deliveries right there, on this candle close, we go long here, right? Now, where are my TPs at? Well, my first TP is going to be at the 2, right? And then my second TP is going to be at the 3.5 to 4. And you can look at the 3.5 to 4. It's like, oh, I have this high right here, right? I have this high here. I have this high here. I'm going to take it to this high. Now, let me go on a higher time frame here because the lower time frame doesn't work. Now you're wondering, okay, well now that I hit the 4, that's exactly, found the bottom, projected up, perfectly lines up, right? Now, this is how you find those pinpoint reversals, right? I call these things the big 3. So there are 3 key areas that I have found in my testing that reverse price all the time, right? And then you need a small, it's either a breaking correlation or an SMT within these levels, and then you will be able to find like where price is going to reverse from. And I'll show you right now. So we hit our 3.5 to 4 standard deviations right here, right? So we know this is the end of the move, or we're about the end of the move, right? Now, you can go and you look. Let's go on a smaller time frame because it's a lot cleaner. If you notice right here, let me go back a little bit. I have 3, what I call the big 3, right? There's midnight price. There's the opposite side of the box from what you start, right? So like if you're bullish, right, this would be one of the big 3. Since you're bullish, this is one of the big 3 because it's the opposite side of the box, right? And then vice versa, right? So if you start up, the bottom would be one of the big 3. And then the other big 3 is the middle of the box, right? So what I tend to notice is whenever there's a break in correlation, right? Notice how this candle just wicked into this price, but it didn't close a body in it. And this one closed multiple, like this one, well, you'd only be right here, right? So this one closed a body in it, and then you started getting displacement away. That tells me, this right here tells me, I consider that like my SMT, right? And that's what causes the reversal. I don't know how, I don't know why, but it causes a reversal. So once you get a change in state of delivery here, you can enter your short position here, and then you take projections all the way down, right? So let's go on a 2-minute, and then the last move up is from here to here, and then you take profit at the 2. Now the safest thing is like you won't always hit the 4, right? So the safest thing is to take most of your stuff off at the 2. And if you look, we perfectly hit the 2. We came back again and we dug deeper into the 2, right? Bada bing, bada boom. So this would have been, this would have been your second trade right there, right? So 119 points, and I think this one was, sorry, This one was 100, close to 140 points, right? And these things happen all the time. Like, you don't have to trust me for this. You can back test it yourself, right? But yeah, that's essentially it. You find the bias, you find the bottom of the day or high of the day, and then you just take your reversal from there. If you find the high or low of the day has already been made before market opens, you just take a trade in the direction of, you can wait for an SMT to take you in the direction. So if you know bottom of day, like let's say we know this is high of day, right? I don't know why we would know that, but let's say this is high of day. At market open, I'm only going to short. I don't want to look for longs. So I'm looking for SMT at the high to take me lower, right? Because we know this is high of day. Um, but yeah, that's the Holy Grail. It works every day. Every day it works. It's just finding the right leg. Um, every day it works. It averages about 100 points. Um, but yeah, like, subscribe, comment, all that other cool stuff. Shout out to Casper SMC, Ethan Trades, Jaden, Team K, BD After Midnight, and Monster Lab. So, thank you. And like, comment, subscribe.